What's going on, everybody? This is Travis with a Spoon from Trade with Travis. Hopefully, everybody's doing very well on this Tuesday morning as we take a look at what's happening with the overall market. I'm going to jump right into it. I'm not a CTA, so I'm not going to tell you what to buy or to sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision. Understand that trading involves risk, involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind and understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you end up making money today. So with that being said, we're going to end up jumping right on to the charts. I actually just got out of a trade on US 30, end up selling it to the downside a little bit earlier and was down for a little bit. Actually ended up making some money off of it. I'm going to talk about what I ended up doing from that overall thought process and strategy and talk about what may end up happening based off of that movement in a quick second. So let's go over what just happened. So end up taking a trade last night. We end up taking a trade yesterday at 29,350. We end up talking about this market could be able to sell down from 29,350 to go all the way up to 28,520 for the overall take profit. What ended up happening from there was that essentially when I ended up getting into the trade, the market ended up U-turning very quickly up to the upside, or got in right here. Okay, so the blue line. Market ended up falling down right around 3 o'clock, put us in profit for about 100 points, actually a little bit more than 100 points. And then after that, the market actually ended up pushing back up. I was in an area where I did not see that the market pushed back up when it came down to profit. When I noticed it, it was actually basically in the middle of this overall area. So it redefined where the actual support was going to end up being. Which means that now the new support will end up being at 29,270. So that will be the new orders where if the market does fall, that's when my sell orders would end up being overall if I wanted to be able to get in. But like I end up saying in this previous time that we end up talking about, I wanted to be able to have a backup plan. This was a strategy for type of trade, meaning that we knew exactly what a resistance was. So I ended up having a pending order when it came down to the resistance for us buying and selling up to the upside when it came down to that movement. So I ended up having a buy order and a sell order in this overall position to say, okay, well, if I end up losing on this one and the market ends up breaking out in the morning time and it keeps on going up to the upside, then at least I have a buy trade that I can be able to ride out to where I think it could possibly be able to go at 30,000. But if the market ends up falling, then I want to be able to have a sale and I want to be able to take it at least down back to the halfway point or the natural support of that overall movement. By doing that, it would turn this loser, into a winner because obviously I end up going a little bit higher when it came down to that position. Market fell down to the halfway point. I've seen it when it bounced all the way down to this point, and then after that, obviously we're seeing a strong move to the upside. So at this particular point, I end up taking profit on both of those trades. Basically, end up making it even. I'm kind of mad that it didn't go all the way to the bottom of support, but we talk about all the time once the market ends up hitting resistance a couple times and hitting support a couple times. If it ends up hitting more than 3 times, then more than likely the only trade that you can be able to get would be to the halfway point and be able to go from there. Now, we can see that the market end up making that movement. We can see that the 15-minute is in the buy zone, which means that we're probably going to end up retesting this. We know that this market has been bearish for a while, and we have not had a strong retest, or not even a strong retest. This is a retracement of a move to be able to get into overall. But I also know that we have this W pattern that I really like being able to trade if it does happen to be able to go up here. So what does that mean? Currently, right now, if you truly look at it, we're leaving this high volume node. We're basically in the middle of this high volume node. So if this market breaks out, there's a good chance that the market could go back up to that 30,000 area. Now, if we end up getting strong news or strong information, there's 2 possible trades that you can be able to take between both of these areas and be able to make something off of it. So that may end up being a plan. I'm going to end up placing in 2 orders. I still think that the market will fall down to the downside. So I probably might end up going with the same strategy that I ended up doing before, which is placing in the sell at the resistance. If the resistance ends up getting hit and falls down, then I have a trade to the downside. If the market ends up popping up to the upside, then I have an order for that one as well. And we'll basically end up making a movement off of that. But if the market is ready to be able to go to the buys, then obviously we have a couple orders that we can be able to get in. I have an order at 29,260 as a sell stop, as a new sell stop. I'm gonna end up placing in another order at 29,650 as a area of being able to look at being able to sell. Now, hopefully, hopefully I didn't jump out of this market too early and see this market actually truly fall and be able to go from there because it's 6:30 in the morning. Uh, but we end up having legitimately a big 100-point move inside of this middle area, and it's bounced and it's holding above the VWAP. And if it's holding above the VWAP and the moving average, to me, that means that we're probably going to end up seeing some strong bullish momentum that may end up coming at some point. So, got to be able to pay attention to that. So, um, here's the game plan. Very simple. Um, my hope is hopefully I didn't jump out of that sell trade too early, but um, buy trade will end up being at 29,670. That's a pending order for the buy. Let's see, waiting for my computer to be able to get situated. All right. Um, I'm gonna say 29,680 just to be safe. 29,680 will end up being a buy. Stop loss on this one. I'm gonna end up going below the moving average of where it is. Let's see, 680, 680, 680. Where can we go? We can go 480, but that'd be basically right at the top of it. Um, Got to give it a little bit of room. Okay, 29,480 will end up being a stop loss. That's a 200-point stop. That's giving it enough room for a 500-point range right now. Any suggestions to start trading? How you buy stocks? A new one started today. Well, first off, let's say congratulations. Being able to take a leap of faith when it comes down to trading is always the hardest portion of being able to do anything. Um, to answer the question, um, when it comes down to being able to start trading, obviously the first thing is being able to find a mentor and being able to find some type of strategy that you feel comfortable in being able to understand. Education is going to end up being one of those things that you're going to have to be able to take pride in being able to do because ultimately there's a lot of information to be able to digest. The thing is, what information is going to end up being important to you and how to be able to do it. Me personally, I don't buy stocks or I don't have a lot of stocks in my portfolio. I personally trade uh, index pairs, forex, cryptocurrency, gold, metal, and everything else. Doesn't necessarily mean that I don't like buying stocks. I have some stocks and everything else, but me personally, my wheelhouse when I first got started was in the crypto market and in the forex market. So that is what I know. But to simply kind of wrap up that answer, um, find a strategy that you can be able to use in any market. And the strategy that I'm talking about right now is a strategy that you can be able to use in any market. So it doesn't really matter about if you're buying stocks or if you're trading indexes or buying cryptocurrency or anything else. Um, it will just be okay. Well, what is the setup? Does it match up with the rules that I'm trying to be able to do? If it matches up with the rules, then I sit up there and trade it uh, and have that thought process. Um, Hopefully that helps. But that would be my quick suggestion. Um, what I'm going to end up doing is that I will give you a little bit of help when it comes down to equity management. Equity management is the most important thing when it comes down to trading in general. The reason why I say that is because if you don't know how to be able to manage your money overall, then it makes it kind of hard to be able to truly do anything when it comes down to trading. Obviously, you want to sit up there and cut your losses and let your winners run, but you got to understand how to be able to manage the money that you end up having. So, um, always as a first time trader, I always end up giving out one of the things that I ended up getting when I first got started trading, which is an equity management sheet. This is called our trade tickets. All I need you to do is do this. Send me a private message with your email address. I will make sure that it doesn't get shown on the chart because I know everybody's a little bit different when it comes down to sending out information. And what I'll end up doing is sharing my trade tickets with you so you can be able to use it. And essentially, what ends up happening, think about it like this. Let's say you end up having $1,000 in your account and you want to be able to trade let's say Euro United States dollar, and you only want to trade with 2% of your account, then what this will automatically do is basically say how much risk that you're going to end up putting into the trade. What you need to figure out is what's going to end up being your reward. Anything above 1 to 2.3, it will give you a yes. Anything below 1 to 2.3, it will end up telling you no. The reason why I set up like that is so it's kind of like retail sales. You want to sit up there, and if you're going to risk $100, and get that off the screen, there we go. If you want to risk $100, um, let's say if you want to risk $100 and you want to be able to make more money than what you end up doing. So it's 1 to 2 with taxes. I always say that point three is the taxes that you end up having that you're going to have to pay at the end of the year. So I always add that in when it comes down to any trade that I end up taking. But I make sure I end up sharing that over to you before we end up getting out of here. But once again, congratulations on being able to take the leap of faith. It's always cool to be able to see people do it. All right, um, so placing the trade, we got a long trade at 29,680, stop loss 29,480 with a take profit of 30,000. Now I'm going to end up looking at being able to sell it again because I don't know if the market's going to end up rejecting again off of that. So I will have an order back at 29,660 and see if the market will break out of that. Now my stop loss on this one will end up being a heck of a lot tighter than what it was before. Ultimately, because if the market's going to end up pushing out to the upside, then it's going to end up running fast. So if I do lose, I want to lose very quick and allow that winner, that buy trade, to keep on running to the upside when it comes down to that movement. So same deal. The buy trade is going to end up being at 29.6. It will be back at 29.660. The stop loss will end up being just above the overall high, 29,760. Uh, and the take profit on this one, um, because this will be the fifth time that it ends up falling. If it does fall, will end up being basically at the take profit that we end up saying before, 28,520. Oh, jeez. 28,520. And we'll see how that kind of plays out. Hopefully it plays out in our favor, and we'll end up going from there. If it does pop up to the upside, hopefully it ends up putting us in a profitable trade to the upside. I'm risking something to be able to make something. It's a little bit more of an advanced skill, but um, ultimately, ultimately, it's another way of being able to do it. Brian, what's going on, big dog? Hope everything's going well. Another question: how do you put an order in TradingView, or is TradingView the site where you watch the market? Good question. Um, it's both, and let me explain what I mean by that. If you have a broker, in which that is the company that you place your money in to allow yourself to be able to trade. So to give you an example, currency.com is the broker for the United States 30. So and they offer the United States 30 as a tradable pair to be able to get into. If you go down to the trading panel, what you'll end up noticing is that there is a lot of brokers down here that if you have an account with them, um, you can be able to place your account information on here. And once you place your account information on here, then after that, you can trade directly onto TradingView. Um, with everything that's going on in Russia and how everything's kind of falling out, MetaTrader 4, MetaTrader 5 might end up being somewhat frowned upon to be able to use in certain areas. So they may end up canceling that. So being able to do it on this will end up being one of those things. What is the best broker to be able to use? I personally end up using Osprey FX. Let me kind of give you a little bit of a hint to that, and I'll tell you why. And then after that, obviously, I'm going to move a little bit faster when it comes down to certain trades. Um, the reason why I say Osprey FX is because it's a non-U.S. regulated broker, but it allows you to be able to trade with 1 to 500 leverage. For me, that works out when it comes down to my automation systems. But at the same time, um, essentially what happens is that it allows you to be able. Okay, let's see. It allows you to be able to um, place in funds in one day and actually still be able to get money. You can be able to get your money back if you end up making money on that same day within a few hours. So it's always cool to be able to do that. Typically, U.S. brokers like Forex.com and Awanda, typically you had that typical 3 to 5 day if you end up making money to be able to go from there. But one group that I am looking at for being able to add on to would probably end up being Currency.com as well. They have some of the same brokers, some of the same pairs that I can be able to get into, but it's on TradingView, so I'm looking at being able to move some of my funds over to that. I can't necessarily sit up there and say that I know everything about Currency.com and I feel very comfortable about it yet because I haven't tried it yet. But once I end up trying it, I'm going to let everybody know. But if you're interested in being able to learn a little bit more about Osprey FX, that is a link, and that link actually ends up giving you a bonus that they end up having for some type of things that they end up doing, being able to go in from there. All right, so cool. I want to make sure that I end up. I want to make sure I have everything right on this one. All right, so we got a buy. We got a buy at 29,680 to the upside, going up 30,000. We have a sell at 29,670, expecting that the market may end up falling all the way down to 29,520 if that happens. We also have a sell at 29,620 if the market ends up falling, basically giving us that vortex area that we can be able to get into. So I'm not going to end up, I'm just going to end up allowing the market to be able to play itself out, whatever direction that it decides to be able to do. Then I'll be in the trade when the market is ready to be able to go. So that is what we're going to end up doing with US 30. NAS 100, let's talk about it real quick. NAS 100 has a couple things going for it that's a little bit off. And this is the reason why I haven't necessarily suggested it as a trading pair, at least for right now. We still have that same type of W type of pattern when it comes down to the high volume nodes and being able to take a look at that from a movement standpoint. The problem is that if it goes up, it's going to end up going right back into another consolidation block, in which that's not really consolidation if you really think about it. It went up, it retested, fell back down. Matter of fact, let me take that off. That's not consolidation. That's just a free run. It's just a retest of a movement. Okay, so all right, so essentially, what could end up happening is this: if the market ends up breaking above 11,430, then you could be able to scout this market at least for being able to buy up to 11,500. So you're talking about 70 points for the first move, and then after that, you could be able to place another entry at 11,540 and be able to basically attack and try to go back up to that 11,700 area where the market initially fell. Uh, Now, out of all of the pairs, Nas ended up having the biggest move on Monday for just a pop up to the upside. Every other pair kind of struggled to stay inside of that box. And the longer that it stays inside of consolidation, obviously the bigger the move is going to end up being. So there's nothing wrong with that. It just means that's kind of hard to be able to make a decision on where the market's going to go. If it falls down to the downside, I still have an order that's at 11,000 if it does fall. But based off of looking at what I'm looking at right now, if it pushes back up, it'll push back up inside of this consolidation that we've seen in early June. All of the markets are bearish, but in order for the market to truly have a strong movement to the downside overall, there's going to have to be some type of retracement. And there hasn't been a retracement yet. So that means that I believe that the market could possibly go up first before being able to fall, or at least just showing signs that it may happen. But either way, I don't care. I'll be in the market when the market ends up making that move, whether it's to the upside or to the downside. Okay. Type in a while, yes, that makes sense. Nas 100, I don't have a trade yet that I would suggest at this particular point. Okay. So DAX, same deal. We have this high volume node right here that we're looking at. We got this large peak area that we'll look at being able to trade into. The market breaks up to the upside. If this market falls, we have a large free run space that this market could be able to go down to, which would be at 11,400. Ultimately, I would like for the market to be able to fall because we end up talking about from a Fibonacci perspective, there is from a Fibonacci perspective, there's a de-extension that's about to be hit from a downside perspective, or not about to be hit, but there's a great chance of it being hit from a downside perspective that would end up being at 10,390 for the overall move. For some reason, my fibs are not showing, but that will end up being the movement to the downside. So if it does fall, I'm going big fish hunting and try to go after that movement to the downside. However, kind of like what I ended up saying before, I believe that what we'll probably end up seeing is this market will end up popping to the upside first before actually falling and being able to make a movement. If that does happen, then it's probably going to end up running back up to this overall area where it fell down initially, which means that 29,520 will end up being the area where we would like to be able to get out of that movement for the buy. Okay, so a couple things. We end up having this resistance that end up happening right here, which matches up with that resistance before the market actually ends up falling. We're going to have a little bit less of space to be able to get in on this move unless you end up jumping into the move right when the market breaks out at 13,320, in which is very close to possibly happening right now if we take a look at that. So it's basically assuming that, okay, let's do that over again. Basically assuming that this was a breakout and it just got caught back inside. So we're taking it before truly being able to see the market go inside of that area. But I like the trade overall if it does break out of that position. So let's say if the market ends up breaking out of 29,350, take profit will end up being at 12,510. Stop loss will end up being just below the overall high volume node peak, which will make this a 1 to 1.5. It's not the greatest risk reward, but sometimes beggars can't be choosers when it comes down to that movement to the upside if you're looking at being able to scalp it. Okay. So that would be a game plan. I'm going to consider that one. I don't know if I'm going to end up pulling the trigger on that one yet, but that'll be something that I would consider. Okay. So we talked about US 30, we talked about NAS, we talked about DAX, XPX 500. XPX 500 is showing that same type of movement that you can be able to get into and be able to make a movement off of at 3,700. Currently, the market is very close to being able to get inside of that zone and being able to trade to the upside. If you're really trying to be safe, then I wouldn't look at being able to take an entry until 3,708. That will have it clearly be truly out of this consolidation resistance point, looking to be able to get out at 3750. So if we go 3708, 3709, so around there, you're still talking about 40 something points to the good, to the upside if you end up taking that trade. Anything below that, well, the stop loss below that will end up being at 3680 or 3683. And then after that, we can see the market kind of make a movement off of that. I like that trade better than, I actually like that trade better than DAX, and I like that trade better than NAS 100. But obviously, you're going to have to risk a little bit more because XPX 500 is a little bit slower of a pair. So you're going to end up trying to win off of that when you're going to have to risk more when it comes down to equity, so you can be able to make more. Okay. Uh, any questions about certain pairs that y'all would like to be able to take a look at real quick before we move forward? Any questions about certain pairs that you'd like to be able to take a look at? Okay, so let's go ahead and go into the big three real quick. I know we're on a delay, so I'm pretty sure some people are going to end up having some stuff that they want to be able to talk about. We'll get to it. Let's go ahead and go into the United States dollar index. Then after that, we'll take a look at gold, and then we'll take a look at oil. XPX stop got it at 3683. 3683. Brian, like I said before, I like that trade better than Nas because it gives a better risk reward. Um, Ultimately, that'll be the reason why I would take it, just because of the risk reward. Originally, I had it at 3676. Oh, I know why I had it at 3676. It was right below the VWAP. or it was right below the VWAP at that particular point in time, which is basically right there. So I would go 36.77. 36.77. Hypothetically, you could take that trade ultimately at 3,700. But the problem would be, in my mind, you'll be directly still inside of this consolidation area. We end up having two taps off of this resistance, or three taps right here, right there, and right there off of rejection. So, in order for this market to truly run, it's going to have to break past those 3 points with some type of force. So that's the reason why I'm saying 37.09. Um, if not, then I would have. If not, I probably would have pulled the trigger already. And once again, take profits at 37.50. Why do I have 37.38? It said something about 37.38. Why did it say 37.38? Why do I have 37.38 on this previous file? Okay, I'm still going to go 37.50. Retracement trades do not get more than 3% on my account. Um, Especially, well, smaller accounts it gets 3%. Larger accounts it only gets maybe 2%. So just be aware of that. But I lock that trade in. That trade is ready to go if it does happen. Okay. All right. So going back to United States dollar index. United States dollar index is going to be very quick. The market hit the D extension, completed the D extension yesterday. We ended up talking about that for a very long time. You end up getting into the United States dollar index when we talked about it, when it broke past 12,782. Congratulations. If you held out for about 6 weeks, 6 to 7 weeks, you end up making money off of it. I particularly don't trade the United States dollar index. I just look at it as a means of being able to understand what's happening with the United States dollar pairs. But market ended up hitting that overall movement. So that means to me, from a weekly perspective, and from a just a basis of how we're going to end up trading, United States dollar index or United States dollar pairs are off the table. I'm not looking at trading any of them at this particular point because the weekly has been hit and there has not been a retracement. So that means to me, when this retracement starts, we'll start seeing that the United States dollar index will start falling, which means that the Dow Jones and NAS and XPX 500 and everything else like that should start going back up. Um, so just keep that in mind when it comes down to being able to take a look at certain trades. If the United States dollar index is going to fall, typically the Dow Jones and everything else is going to end up going back up. It's a small correlation to it, but typically when you end up seeing that, if the value of the dollar gets stronger, then everything else gets weaker. The value of the dollar gets weaker, then everything else gets stronger. So that's something to be able to pay attention to. So like Euro, United States dollar, and everything else like that, I would not look at being able to trade. I'll keep that in mind and being able to say I'll look at United States dollar short-term weakness when it comes down to movements. All right. With that being said, let's take a look at gold and see if that kind of matches up. We took a look at gold um, for the last 3 to 4 months and said that we didn't want to take a trade because the market didn't break below 16. I think it was like 1685 or something like that. The market finally ended up breaking below 1685. We ended up taking one trade down to 1653, and then after that 1615. Currently, right now, uh, we're still in the midst of being able to take a look at that trade from 1615 to the downside. If you're still in that trade, um, I would consider looking at being able to take some type of profit off of it. I got out of this trade a little bit earlier than what I wanted to. I think I ended up getting out of it when the market ended up breaking this counter trend line, breaking 1625. Uh, and being able to have that big spike to the upside just because just because the United States dollar index ended up hitting its D extension. So once again, everything kind of goes back to just the index pair in general. But ultimately, what I think is going to end up happening is that we're probably going to end up seeing that this market will start to push back up and start trying to go back up to 1658 and truly try to retest that area. So if you were in that trade on gold, I would say go ahead and take profit. You should be very much in the profit anyway. So either way, even if you didn't get out at 1625 like I did, um, you still are in the money. So let's go ahead and look at being able to take profit in that position. Other than that, I would not look at buying it. I just stay away from it at this particular point. Oil, I think that it might be time to start looking at buying oil at some point. Um, from a weekly perspective, sorry about that. The market is still inside of this downward channel. It fell down and hit 77.11, which was I take profit on Friday. Um, from there, I do expect that when the market ends up breaking out of this channel to the downside, we'll finally end up having some uptick movement. We end up having some free fall movement to the downside, and then after that, we can see that the market has settled at 77.11. This market is still in a bearish crown, meaning that if it does go up, I still think that once it gets up to the 90s, we'll probably end up finding a little bit of struggle being able to break to the downside. I mean, be able to break more to the upside. Um, but based off of what's happening with this movement, more than likely, what will probably end up happening is that it will get up to 95, but that will be the decision area for us being able to break out. If that makes sense. Um, and so I'll wait for the market to be able to break this counter trend line break or this blue line to the upside. Once it starts to be able to do that and start showing that it's ready to be able to go, I'll look at being able to get out at 95. And then after that, try to see how the market's going to react and if it's going to end up being in consolidation again. But currently, right now, there's really no move to be able to take. We already took the sale. That trade is over with. Just keep your eyes on the trade, and we'll go from there. Sorry about that. Everybody, give me 1 second. That's utterly rude. Me trying to clear my nose while I'm trying to do that. Everybody, give me 1 quick second. Sorry. All right. All right. Back on. Brian, thanks for the kind words. I really do appreciate that. Um, so other than that, I think the biggest thing now is let's talk about what's happening with the economic calendar, see how that kind of end up affecting the market. Um, today, huh? Okay, that's new. Jerome Powell's going to end up speaking in 28 minutes, and yes, that's very irregular. Um, to, what is he going to talk about? Because that changes a lot. Hold on. What is he about to talk about? What are you about to talk about, Jerome? Fed Evans says he's getting a little bit too nervous about going too far too fast with rate hikes. Stocks try to bounce from the lows. Okay, that doesn't help me out with anything. Bitcoin finally ended up hitting 20,000 again. That's not telling me anything. Okay. Everybody be on alert. Everybody be on alert. What's going to end up happening at 7:30? Um, I think those moves that I end up saying to the upside uh, may end up kind of pushing in place fast, depending on what he ends up saying, or may end up pushing in very fast to the downside based off of that same movement. So, um, like I ended up saying before, especially with US 30, don't take a trade until the market either breaks the consolidation or breaks the support or the resistance of this overall move. I was in a sale a little bit earlier at 29,660. I ended up getting out of it early, and maybe the reason why this news might, or maybe the reason why might end up U-turning like that was because there may be something that he could end up saying to be able to push the market to the upside. Let's see, due to participate in panel discussion about digital currencies at an event at Bank of France in Paris. Okay, that probably won't move the market as much as I think it would, unless he starts talking about rate hikes. Okay, I feel a little bit more um, I feel a little bit more easy when it comes down to that. That's not a big thing, but he's going to talk, and typically when he talks, the market moves anyway. So keep that in mind. 7:30, 7:30. Make sure you end up getting your eyes on that one. I'm gonna stop here. I gotta get to school. But everybody, I do appreciate being able to lock in with me. Make sure you end up clicking on that boost button. Make sure that you end up helping yourself out when it comes down to that. Uh, for our first time trade, I'll make sure I end up sending over that information over to you. Once again, congratulations on being able to get started. It's always cool being able to do that. Um, Later on tonight, I'm going to end up talking about the Discord channel and everything else like that. I am 90% done, and I'll be hopefully 100% done once we end up talking about that at 9 p.m. And hopefully we can be able to say that you made a little bit of money on the way by being able to do that. Like always, make sure that you end up planning your trade, and then after that trade, you plan. Everyone, I'll see y'all a little bit later on, 2100 hours for my people across the world, and 9 p.m. Eastern Standard Time for the people in the States. All right, take it easy.